On today's episode, we are going to take a quick look at Nvidia. They are reporting earnings tomorrow. So in today's episode, I want to take a quick look at what are some of the things I'm keeping my eyes out for. If you guys are not familiar, Nvidia is my #1 position in my portfolio, and this is a tier 1 stock for me. My top 5 positions in my portfolio make up roughly 40% of my total account, and 4 out of those 5 have already reported earnings. Nvidia is the only one, and luckily right now they have all done super great after earnings. Let's hope Nvidia makes it a 5 out of 5 on my tier 1 stocks, and all doing great after earnings. If this is your first time here, make sure to hit the thumbs up. Don't forget to hit the subscribe button, and let's get started. For those not familiar, my name is Jose Najarro. I am a stock market investor, but I do have a master's degree in electrical engineering, so I'm hugely focused on semiconductor companies. Nvidia right now, as I am recording this episode, is down about 3.03%, and we all know our portfolios could be doing a little bit better right now. The overall volatility in the market, with so much news about Delta variant, with kind of slowed down by the Fed, with just overall these geopolitical issues happening right now, are really affecting stock prices. At the end of the day, Nvidia is still a long-term hold, and no matter with this volatility, I have no intentions of selling anytime soon. This is a position that I believe will stay my #1 position for multiple years. But if we take a look from its 52-week high, the stock is down roughly about 6.5%. I want to say in the past 3 months since their last earnings, there has been a lot of news, right? This company did have an Nvidia, they had a stock split, which kind of got the stock excited, even though no fundamental changes has happened. A second thing is we're getting closer to their ARM acquisition. To me, at the end of the day, this ARM acquisition, there's so much news behind it that me personally, I don't believe it's going to happen. And at the same time, I don't believe Nvidia needs it. So this ARM acquisition, if Nvidia gets it, it would be amazing. If it doesn't get it, for me as a long-term investor, it wouldn't really hurt my overall thesis. I think Nvidia will do perfectly fine with or without this ARM acquisition. But I do believe that it's going to continue to add some volatility into the market, and something investors, hopefully they give us some form of insight or some form of update during these upcoming earnings. The third thing I do want to say is we are kind of seeing this semiconductor shortage still impacting the company, which is really driving these companies to continue to produce and kind of see these crazy revenue growth. So Nvidia right now, I want to say that's something else really affecting the stock price. I want to see what kind of guidance they give for the upcoming quarter. What kind of guidance do they see in the chip shortage? And where is it really impacting? Is it going to continue to impact their graphics card? Is it going to impact some other segments like the automobile segment or other segments? So I really want to take a listen to what Nvidia says for their semiconductor shortage and how it's affecting the company. They are expected to report about $1.02 on earnings per share and revenue of about $6.34 billion. And these are the numbers analysts have projected. This is what investors are going to be looking for. So the first thing is we want to make sure these are beaten. To me, at the end of the day, I could really care less of what analysts project. I just want to make sure the company is still growing. I still want to make sure they are still going in the direction they expect to go. Obviously, beating is great and will do good things for the short-term volatility of the stock price. But for the fundamentals, right, like a company is not broken or made in one quarter. There's multiple quarters and even a year before a company can really show, hey, if this is a true powerhouse or if this is a company that's failing at the moment. Next, I also want to see of what they kind of announce with this super base command platform. But before we go there, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through The Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So I do believe one of the great things about Nvidia right now is at the moment, Nvidia is pretty much just seen as a hardware company. They're pretty much just seen as a graphics card company, but they are so much more. They are becoming more of also a software company and becoming more of a recurring hardware computer company. The first, one of the biggest movements, I think, is on August 2nd of 2021. They announced this super-based command platform where enterprises are able to kind of rent out supercomputers to some extent over the cloud and kind of use those servers instead of these enterprises going out to buy some of these supercomputers. Buying a supercomputer can be super expensive. Get it? Supercomputer, super. Regardless, right? So this is starting at $90,000 a month. And for me, I've worked in some of these big enterprises companies and these big engineering firms that they wouldn't bat an eye kind of paying this type of money, $90,000 a month starting point for multiple months instead of purchasing and kind of having their own supercomputers. So I want to see what kind of growth they're kind of doing in these reoccurring software subscription services and how is that affecting the company. At the same time, right, we take a quick look. This company, most of its revenue comes from gaming and data center. Gaming and data center, I want to say, make up close to over 80, maybe even more than 80% of this company's total revenue. So I want to make sure are we still seeing that growth in gaming? Are we still seeing that growth in data center? I know right now we are seeing more places open back up. We are seeing a little bit less screen time. So has that impacted at all the gaming segment or the data center segment? In my opinion, I'm going to say no, because even though the gaming segment might have seen a bit of a decrease, we're still seeing a lot of these gaming companies produce a lot of better numbers compared to the same time last year, even compared to a quarter ago. I just did a video on C Limited. I just did a video on Roblox. Quarter over quarter and year over year are still growing at crazy levels. Those are gaming companies. There's still a huge shortage of graphics cards in the gaming department. I still can't even pick up an RTX 3000 series right now. So I do believe the gaming market is still going to be growing. The data center, I want to say, might not be growing as fast. I would be very excited if that data center, we can see from a quarter ago, it only grew about 100 million. And that growth has kind of slowed down the past 3 quarters. We can look at here. I would be very bullish. It would be very bullish if data centers took a huge growth. For me, I'm not expecting much of a growth. I'm pretty much expecting a slow climb up. The other segments aren't growing at crazy levels. I do believe the OEM and others, this is where some of their software products are in. I would love to see how that's growing, especially as this company continues to evolve new software as a service products. We're seeing kind of them hitting, I want to say, the Morpheus that is hitting the cybersecurity. They also have the Omniverse, which is hitting like the visualization. They also have a lot of pre-trained model softwares that is hitting stuff like driving simulations and other types of modelation of artificial intelligence training platforms. So I do want to see how that's also growing. I don't think it's going to be a huge impact. I don't think this software as a service that Nvidia is kind of providing is going to make a big impact anytime soon, but it's something that will be growing over time, over quarters. Also here in OEM and others, you have the chips kind of made for the crypto mining. I also want to see how crypto mining is growing, right? Is that kind of slowing down? Is that growing? Because as in the recent quarter, Nvidia started to create their own graphics cards for crypto miners, and they put it under this section. That's why we see a huge major growth there. Another thing I want to mention is this company is not only inside the graphics cards anymore, they are designing CPUs, for example, the Nvidia Grace, and this is expected to start sampling in 2022 and shipping in 2023. I just want to make sure, due to chip shortage, due to everything else, these timelines haven't shifted. Even though it's still a time frame from now, I want to make sure they're not shifting. The Nvidia Grace sampling 2022, shipping 2023. So those are the main things I am going to be taking a look at for Nvidia. All right, so now let me share my overall thoughts. So Nvidia, even right now, I do believe is going to be very volatile with everything happening in the market. Let's say worst case scenario, stock price drops big. If the stock price drops big, I don't believe I would sell unless something crazy changes fundamentally for the business. I don't think that would happen, right? A company is not made or broken in one quarter. I am a long-term investor, and Nvidia, I believe, has huge potential. But if this company takes a nice dive, I would say it depends on the price point. It's already my number 1 position, so it would really have to fall down a lot for me to really enter in a big position. I believe that price point would be somewhere in the 140s, 150s. If we don't see anywhere within those levels, that's fine. I have no intentions of buying right now because my position is pretty big. At the same time, let's say I did not have a position in Nvidia right now. I do believe it's a bit overextended, but I do believe that sometimes getting some skin in the game, especially if I have free trading and I have fractional investing, getting some skin in the game isn't the worst idea. Again, skin in the game is just a small position to kind of just be able to watch this company over time. So those are my overall thoughts on the companies. I hope you guys enjoy, and we'll definitely do a video on earnings tomorrow. So take care, have a good day, and see you next time.